Hi guys, welcome back. Well, this will be the last lesson for the Bookkeeping to Trial Balance series. And as I said before, we will be doing a subject that I've been emailed about a lot of times, and that is the general ledger reconciliation. A lot of people have emailed me about it and asking questions about it, so I'm glad I'm finally getting the chance to do this lesson with you, and I hope to explain it to explain it as simply as possible. Okay, now since I did mention before that I did this course in 2010, so we did not have to do a general ledger reconciliation. So yeah, we were lucky, but I know the textbook has changed and the general ledger reconciliation has been added to it, so we will be looking at that. Now, since I do not have that chapter in my textbook, I'm going to use the example out of this. I think it's the example out of the sample assessment that you should have on your CD. That's at the back of your textbook. So it's the sample assessment at the back of your textbook. Should be page 44 if I'm not mistaken. Just want to thank you to the student that emailed me this lesson, and I am glad to be able to do that with you. All right. So, let me get my pen. Now, the first thing what we need to look at is you're going to get a general ledger, and it's going to look a little like this. So you get your trial balance, and at the end you're going to see that it is not balancing. So now you have to go through, you need to go and search for all the mistakes that were made, and you will need to fix it. Okay, and then you need to make the necessary adjustments, and then you will have a corrected trial balance. And sorry, I forgot to flip my screen. Sorry about that. Okay, so the first thing we're going to do is let's look at the question. It says that the following incorrect trial balance appeared in the books of Zucker Traders on 31 January 2012. The business makes use of a manual bookkeeping system and is a registered VAT vendor and deals only with other registered VAT vendors. A standard VAT rate of 14% applies. All amounts are inclusive of VAT unless indicated otherwise. The business uses the perpetual method of inventory keeping, and inventory is marked up by 60% on cost price. Okay, so you should have your trial balance in front of you, the one that is not balancing, and then at the end of the question on page 45, it gives you the errors and omissions that were detected. So now you need to go and fix it. So let's look at the first one. It says drawings by the owner amounting to 5578.82, which is selling price including VAT, was recorded by debiting the cost of sales account and crediting the trading inventory account with the correct cost price. The VAT amount of 428.2 was debited to the drawings and credited to the VAT. Okay. So, when you do a general ledger reconciliation, you must ask yourself 3 questions. Number 1 is what were you supposed to do? How was the transaction supposed to go? Then you look at another question saying, okay, what did I actually do with it? And the third question is, how do I fix it? So question number 1 is, what did I do? Question number 1, what should I have done? Question number 2, what did I do? Question number 3, how do I reverse it and fix it? Okay, so let's look at this question again. It says drawings by the owner of 5578.82, selling price including VAT. was recorded by debiting the cost of sales account and crediting the trading inventory account with the correct cost price. The VAT amount of 428.2 was debited to drawings and credited to VAT. So first of all, let's see what should we have done. So when we know when the owner takes something from the business, it's called drawings. So what happens? What three accounts are you going to use? First of all, you're going to use drawings, which is an equity minus plus. Then trading inventory, which is an asset plus minus, and then VAT, output, which is a liability minus plus. So they give us the amounts of 5578.82, which is a selling price including VAT. Okay, but now we have to remember all the rules that we have learned before, and at what price does the manager or the boss take stock? He takes it at cost price. So the first thing we need to do is we need to calculate the cost price of this product. So first of all, let's see, I'll just write on, no, let me write this side. So first of all, we've got the selling price including VAT. So that will have to take you back to the magic block. And as we know, the magic block works excluding of VAT. So let's just take the VAT out of there quickly. So that'll be 5578.82 divided by 1.14, and that equals 4893.70. Okay, so the VAT exclusive selling price is 4893.70. So now we need to go and calculate the cost price, and for that we use our magic block. So we've got our cost price, our profit, we have our selling price. And remember, the question said that it's calculated on cost, so we're using the markup percentage. So that'll be 100. It said in the question that it's 60% on cost, so that'll be 60, that'll be 160. We've got the VAT exclusive selling price up there, which is 4893.7. So now we need to calculate the cost price, which is 4893.7 divided by 160 multiplied by 100. Sorry about the noise outside, they are busy cutting the grass. So then you're calculating the VAT exclusive of the cost price. It is 3058.56. Okay, great stuff. All right. So what have we done up to now? So we got the question, and first of all we're going to see what the transaction should have looked like. Okay. So first of all, drawings, we know is a debit account. So you have to do the VAT inclusive amount for drawing. So in other words, that'll be 3058.56 plus the VAT amount of 428.20. Okay, so that gives you then the amount of 3486.76. Okay. All right. So remember, when the owner takes something from the business, he takes it at cost price, and then drawings is your main account, and we all know that your main account is a VAT inclusive amount. So the first thing we do, I'm going to repeat myself, is we first calculated the cost price. So the trading inventory then will get decreased by the cost price, the VAT exclusive amount of 3058.56, and then your VAT output will be credited with 428.2. All right. So that is what we've done. That is what we should have done. Okay, so when the owner took drawings, we should have debited the drawings account with the VAT inclusive amount, credited the trading inventory account, and then credited VAT input. That's what we should have done. All right, so let's look at the question again. Now we have to look at, okay, drawings by the owner amounting to 5578.82 was recorded by debiting the cost of sales account. Okay, so this is what we should have done. Now what did we do? We debited the cost of sales account, equity minus plus. So we debited the cost of sales account, sorry, I just have to check here. I debited the cost of sales account and we credited the trading inventory account. So we debited cost of sales with 3058.56. Okay. So 3058.56. So what was the questions? Number one, what should we have done? What did we do? That, let's just continue reading. Okay, it was recorded, we debited the cost of sales account, credited the trading inventory account, but hey, that's something we should have done. So that one is actually right. At the correct cost price, yes. The VAT amount was debited to drawings. So that's right. And credited to VAT. That's right. Alright. So I know this can be quite a little bit confusing. But if you answer the questions, like I said before, you just need to focus, drink a cup of coffee, and then just concentrate on what you're doing. So let's look at this again. I know I'm going to repeat myself, but a lot of people seem to battle with this. So first of all, we calculated the cost price to calculate what we were supposed to do. Then we analyzed to see what did we do, and now we have to look at how can we fix it. Alright, so as we already see from the question, trading inventory is correct, so we don't have to change anything there. That output is correct, so we don't have to change anything there. Cost of sales, however, was incorrect, so we need to reverse the cost of sales. Am I right? We need to reverse the cost of sales. So how do we reverse the cost of sales? I just want to see if I haven't got I'm going to use a red pen for that. Okay, so we have to reverse the cost of sales with 3058.56. Okay, and then we need to add the 3058.56 to drawing. So this one has to be added to the drawings, because if you read your question, you will see that we only debited the VAT amount to drawings. We didn't do the drawing, so all we did was we debited the VAT amount, we credited the trading inventory, and we credited the VAT. That's all we did to the question. And then we added the amount that was supposed to go to drawings, we added that to the cost of sales account. So now we just need to reverse that again. So you reverse the cost of sales by crediting the 3058.6, and then we have to add, we have to debit drawings account with the same amount. Alright, so here we credit it, there we debit it. Okay, and that's how we fix it. So in order to fix it, I'm just going to make a little note over here, because I'm going to put all the information into the trial balance at a later stage. I just want to make notes of everything that we have to fix. So we need to fix the drawings, we need to fix the cost of sales. So we have to debit drawings with an amount of 3058.56, and we need to credit cost of sales with the amount of 3058.56. Okay, so just make a mental note for yourself what you have to fix, and then just write it down. We will put it in the recommended adjustment column when we're done with everything. Okay, so we had to reverse the cost of sales and we had to add to drawings. So just read your question very, very carefully, okay? Right. Let me wipe this quickly. Okay. So now let's go look at number 2. It says here that office refreshments were purchased for 272.09 Rand from petty cash. Office refreshments, so that's, you're not allowed to claim VAT on that. From petty cash, but VAT input was claimed on the purchases. The transaction was also recorded in the cash book payment instead of the petty cash journal. Okay, so question number 1, what were we supposed to do? Let's read it again. Office refreshments were purchased for 272.09 from petty cash, but VAT was claimed on the purchases and the transaction was recorded in the cash book payments instead of the petty cash. Great. So let's draw our T accounts again and see what should we have done. We should have our petty cash. It's an asset plus minus. And then what did we buy? Office refreshments. It's an equity minus plus. So in other words, your petty cash decreased with 272.09, and then your office refreshments, which is an expense, gets debited with 272.09. Sorry, I put a 7 there. Okay, so this is what we should have done. Now, what did we do? Office refreshments were purchased, petty cash, but VAT was claimed on the purchases. And it was recorded in the cash book payments. Great, so let's go there. So what did we do? Number 1, cash book payments. So bank, asset plus minus. Office refreshments. It's an equity minus plus, and then VAT input was claimed. Is an asset plus minus. Okay. So in other words, your bank was credited with 272.09. Am I right? So your office refreshments were debited then by the VAT exclusive amount, which would be 238.67. Right, and then VAT input was claimed, so it's debited by 33.41. All right, so that is what we have done. And now we need to fix it. So number one, how do we fix it? That was supposed to be petty cash, so we need to reverse bank. So you reverse the credit balance by debiting the same amount. So it's 272.09. Office refreshments was supposed to be VAT inclusive, right? So the VAT part has to be added to that. 3.41, and then your VAT input or your VAT has to be cancelled, so you credit that amount of 3.41. Okay, so that's how we have to fix it, and then we have to add the amount to petty cash. Okay, so let's have a quick look. So first of all, we need to credit petty cash with 272.09. You need to debit bank with 272.09. You need to debit office refreshments with only the VAT amount, 3.41, and then your VAT, you need to credit VAT input, which is actually, it turns into VAT output, but yeah. I'm just writing credit VAT input with 3.41. Okay, let me just see if I'm correct. Yes, I am. All right, great. Okay, so that was number 2. And just a quick thing, how did I get to the VAT amount? I just simply deducted the VAT exclusive amount from the VAT amount, and then the VAT exclusive amount from the VAT inclusive amount, and that will give you your VAT amount. But by now, you guys should know how to calculate VAT inclusive and VAT exclusive amounts. All right. All right, let's wipe here. Okay. Now we are looking at number 3. Okay, a payment for rates, which is rates and services out of petty cash for 495 has not been recorded as yet. Okay. Well, that should be very, very, very straightforward. It just says that you forgot to add a payment for rates and services. So what would the transaction look like? So it says rates and services out of petty cash for the amount of 495. So you have your petty cash. It's an asset plus minus. And you have rates and services. It's an equity minus plus. And then remember, when money goes out, you claim that input. An asset plus minus. So the petty cash gets credited with 495. Rates and services gets debited with the VAT exclusive amount of 434.21. And your VAT input gets debited with the VAT amount, which is 495 waka waka minus 434.21. And that gives you 60.79. So since this transaction wasn't recorded to begin with, this is just the amounts that we need to add in. So let me make my notes. So in other words, we need to, okay, I've already got a credit with a petty cash account here. So I'm just going to add that amount in there then. So I've got a credit petty cash, we have to credit petty cash again, so that's plus 495. Rates and services, I haven't got one, so you need to debit rates and services with 43421, and then you need to debit VAT. Now I've got a VAT here, but that's a VAT I have to credit. This one I have to debit, so I'm keeping it separate. Then you have to debit VAT input with an amount of 60.79. Okay, everybody happy? I hope so. Okay. So like I said, this was a very simple one. You just had to add that transaction. Okay, now we're looking at number 4. Okay. The stationery column in the cash book payments was undercast by 859.23 and posted as such. So once again, this is a very straightforward one. It just says that your stationery account has been undercast, so you just need to add that amount in. So you've got your stationery, which is a expense account minus plus, and debit 859.23. All right, simple as that. So this is what we need to do to fix it. So we need to debit stationery with an amount of 859.23. So you just basically need to just read the question and, well, answer the questions that I told you to ask before. It's as simple as that. See, it's not actually as difficult as people think it is. All right, question number 5. A new conveyor belt, which is plant and equipment, purchased for 6,750 plus VAT, was recorded in the office equipment account. The VAT on this transaction was recorded correctly. All right, okay, so they say the VAT was recorded correctly, so we don't need to worry about that. So we only have to worry about the 6,750. So what should we have done? Is we should have debited plant and equipment, but what did we do? We actually debited office equipment. So let's see. So we've got office equipment. It's an asset, if I remember. Asset plus minus, and then the other. So what we did was we debited office equipment 6,750. So we were supposed, let's say, so it's plant and equipment. That's an asset plus minus. Okay. So because the VAT is already done correctly, we don't have to worry about the VAT amount. So now we need to fix it. So we first now need to reverse it, take it out of the office equipment. So we credit office equipment with 6,750. And then we add that, the credit to the plant and equipment, 6,750. Okay, that was also very straightforward. There was nothing funny about that. So we have to credit office equipment with 6,750. And then we need to debit plant and equipment with 6,750. Okay. So bring everything back to your T accounts. Everything in accounting works in T accounts. If you don't know how to do something, do your T accounts. All right. The outstanding debt of a debtor must be written off as irrecoverable. So it's 1850. 1850.5, VAT input may be claimed back from SARS. So once again, this is just a transaction that was not recorded, so we just have to add it in. So how would this transaction have been recorded if we'd done it? You would have your debtors control, which is an asset. We have credit losses, equity minus plus, and then VAT input. It's an asset plus minus. Okay. So the amount is our debtors control would have decreased by 1850.50. So we debit the debtors control. Our credit losses will be, we credit debtors control. We debit credit losses with 1623.25. And then VAT input gets debited with a VAT amount of 227.25. Okay, and that's also then how you fix it. So let's say debtors control. I haven't got any debtors control there, so we credit debtors control. With 1850.50. We debit credit losses by 1623.25. And then we debit VAT input. I've already got a VAT here debit, so 60.79 plus 227.25. Okay, and I think that is the lot. Great. Where's my? Okay. So now, after you've done this, go back to this list that you've made. Sorry, I'm just going to turn it a bit that way. Go back to this list of you made of everything that you need to fix and just see if there's anything you need to add up. Okay, drawings is fine. Cost of sales, petty cash. We had two fixes, so it's 272.09 plus 495. And that gives you 767.09. That's a credit, your petty cash. Those are all fine. And then VAT input. Just see. Where am I now? Oh, sorry. Sorry, debit. Yeah, debit VAT. I'm on the wrong page. Sorry. That's 60.79 plus 227.25, and that gives you 288.04. Okay. And now after you've done this, all you have to do is take all this information and just transfer that to your recommended adjustment on the form. So I'm going to show you this quickly. Sorry, I do have to move the camera, so please excuse all the movement. Okay. So as you can see there, we debit drawings. So all you do now, as you can see, drawings there, you had a balance of 12,691.44. So on your paper there, you said you debit drawing. So on the debit side, you just simply put in that amount, 3058.56 on the recommended adjustment. Then the next one is you credit cost of sales with 3058.56. Okay, let's go see where's cost. There we go. There's cost of sales. And then you just put that amount in the credit, 3058.56. The petty cash, you credit petty cash, which is the 272.09 plus 495 is 767.09. Then you go to your petty cash account. Let me just find that for you. There we go, petty cash B13, 767.09. All right, and that you do with all of those corrections that you have done. You just simply fill them in there, and then you need to add them. Now there are different ways in which we can add them. Okay. So first of all, let's take the drawings. So let's say you had your drawings. Just gonna write here. It's an equity minus plus. Now on drawings, you had a debit balance of 12691.44. You made a debit adjustment of 3058.56. So all you do is you add them up. That'll be 15750. So therefore your corrected trial balance will then have a debit balance, because you see it's on the debit side, of 15750. Okay, let me just quickly show you what I did there. Okay. See drawings, there's the balance, a debit balance of 12691.44. You had an adjustment of a debit amount, so you just add it up together as the 15750, and that then will be your debit amount. Okay. Okay, I'm just going to do another example, because that now you can do with all of them. Let's do another one. Let's do one that's got debits and credits, like VAT. VAT control. Sorry. VAT control. Okay, so VAT we had, okay, let me just get the balance first. VAT control had a credit balance of 10220.68. Okay. Then we had the adjustments. We had the credit adjustment of 33.41. And where's the other VAT? We had a debit adjustment of 288.04. Okay, so all you do now is just a normal balancing act. Okay, get my calculator, sorry. Oh, just dropped my bag. Sorry about that. All right. So let's add up that total. It's 10220.68 plus 33.41. And obviously we can see that that amount is much higher than that one. So this is 10224.09. Okay. 10224.09. Okay, minus 288.04. Where is my, yeah. So in other words, the balance amount will be 101966.05, and you know, if you have a debit balance, it will be a credit, and as you can see, yes, on the answer, that is correct. Let me just point you into that direction again. Here we go, VAT control account 1022 Waka Waka. There we've got our debit correction and our credit correction. And as we saw on our T account that we just did there will be a credit balance of 101966.05. Okay, so that's one way that you can do the adding. Obviously, if there was any accounts that you didn't have to fix anything, that amount would still just stay the same. Only the ones that you made an adjustment for will change. Another way you can look at it, sorry, just need to get a pen again. Another way you can do the adding without having to draw T accounts for everything, you can look at your trial balance. If you had a debit balance to begin with, you add all the debits and you subtract all the credits. Okay, sorry, let me just do it here. You subtract the credit. So if you had a debit balance to begin with, so let's take drawings again. Drawings, you had a debit balance of 12691.44. So if you have another debit in your adjustment, you add the debit. If it had a credit adjustment, you would subtract the credit. All right. So, and if you had a credit balance on your original trial balance, you would add the credit and subtract the debit. If you've got anything like you had with your VAT control, which had a debit and a credit balance, it works exactly the same. Like the VAT control had a credit balance of 102,220.68. So that's simple. So all you do is you add your credit and you subtract your debits. Okay, so that's an easier way than you do it with your entire trial balance after you fixed everything. Sorry, I know I'm doing a lot of movement here. See, and you just add all your fixtures, and as you can see there, after all that, your trial balance balances. Well, I hope this lesson helped you. If not, feel free to throw me an email and ask me questions about it. You're more than welcome to do that. But like I say, this has been fun. I am not done. The next subject that I will be starting will be business literacy, and I'll be doing the maths portion of that specific subject. If there is a chapter in your bookkeeping to trial balance textbook that I did not put a lesson on, and you would like me to do a lesson on it, please let me know, because as I said before, I did this course in 2010, and I know a lot of things have been added to the textbook. So if you would like me to do a lesson on anything that's in your textbook that I did not talk about, feel free to send me the lesson. If you can scan it in and just send it to me, I will go through it, and then I will get a lesson done on that as soon as possible. But in the meantime, I'm looking forward to seeing you guys in business literacy, the maths portion, and we can have some more fun over there. So thank you very much. And just on a last note, semi-last note, congratulations to everybody that's emailed me and telling me that they've passed their subjects and they're doing very well. So congratulations on passing your subjects, and keep working hard. I'm very proud of you all, and I'm looking forward to seeing you guys in business literacy. Ciao.